Hello everyone. This is the pre-market report video for today, 29th November 2023 for the Indian stock market in terms of Nifty and Bank Nifty. Yesterday, during our market time, there were lots happened. So we will discuss those first and then we can move on to the US market. Let's get started. Yesterday, before the market opening itself, there were a couple of strong positives. First of all, around 6 to 8 am, S&P Global released the Asia Pacific countries credit condition report. In that, they mentioned why India as a lead along with the other South and Southeast Asian countries will be a next growth engine, not China. They said in FY 2026, India expect to grow 7%, whereas China will be 4.6%. Already couple of days before only, S&P Global upgraded India's FY 2024 GDP growth rate to 6.4% from just 6% earlier. So, all the report S&P Global released before yesterday's market opening and Monday about Indian economy was really positive. That made our market to open gap up of 50 points despite all the areas were down on the previous night in US market. Then second, about Adani stocks. On last Friday, Supreme Court said that they won't consider Hindenburg and OCCRP report as a credible one for the allegations related to Adani stocks. And also, SEBI mentioned that they don't want more time to look into this issue. Both these statements made Adani Group stocks to rally up to 20%. So, yesterday in Nifty, Adani Enterprise was the top Nifty positive contributor. Here, yesterday till 2 o'clock, auto sector, Adani stocks and mainly PSU banks are the ones that supported the market, whereas IT and Reliance drags the market down. Regarding early dragging reasons, we already discussed about those in the last pre-market video, so I don't want to repeat those. Rather, let's discuss in detail about the recovery. Exactly at 2 p.m. yesterday, American tech market intelligence firm called Gartner released the press release. In that, they are projecting in this year, Indian IT spending expect to increase over 10%. If required, please pause and have a look. This is the table I took from the Gartner press release. Here on 2022, India's IT spending did increased by 5.5%. However, in 2023, rather it contracted by 0.5%. So, this is also the reason why last year IT didn't do well. However, this year they expect it to increase over 10%. Especially in that both software and IT services spending expect to increase 18.5 and 14.6% respectively, which was even much higher compared to last 2 years. This changed the momentum and created the short covering in IT stocks. Now coming to Reliance. Yesterday, not at 2 p.m. but before itself, there is a market intelligence company called Kepler who released the Europe diesel import related report. If required, please pause and have a look. This is the graph I took from Bloomberg, which they compiled based on Kepler report. In this November month, Europe imports every day over 3 lakhs barrels of diesel from India. And this is the highest ever India diesel export to Europe. Earlier, September month was the highest. Then in October, it dropped. But now in November, it reached the all-time high value 3 lakhs barrels per day. Just for info, every day Europe required 9 lakhs barrels of refined diesel. So in that, over 30% of oil is exporting from India. Yesterday, I read another article that in Sri Lanka, China is going to invest around $4 billion for new oil refining plant. I was surprised and I don't understand why. Now it's kind of making sense. Since at present this Russia conflict not going to end anytime sooner and it's not feasible to send oil from China to Europe, it's a long distance. Having a plant in Sri Lanka will help them better and also they can have some Indian Ocean regional control. Anyway, back to topic. In the same Kepler report, they did mention Reliance Industries is the top supplier of Indian diesel to Europe. So, at 2 p.m., IT stock short covering did trigger the Reliance short covering as well. Once Reliance and IT stocks trimmed their loss, the Nifty increased its positive percentage and moved above 19,900. So that's about the Indian market. Then coming to US, as I explained in the last pre-market video in detail, at present US market is playing a waiting game. First, tonight's release, second estimate of third quarter GDP, then followed by tomorrow, very important, widely expected PCE inflation data release. Because of those reasons, again last night it closed flat to positive. First on last Friday, flat to positive, then Monday night, flat to negative, now again last night, flat to positive. So, US market is not moving at all. Dow Jones increased by 0.24%, S&P 500 increased by 0.1% and Nasdaq up by 0.29%. In case of US VIX, no change, below 13. Regarding oil, it has been decreasing for last 5 consecutive weeks, which was the longest continuous oil price decline since 2021. Now tomorrow, as we know, it's OPEC Plus meeting to discuss about the production for 2024, which in turn triggered the short covering and increased it by around 2%. At the time of this video, Brent crude is trading around $81.5 per barrel and WTI crude is trading at $76.5 per barrel. Coming to Indian ADR, both the IT stocks closed positive, whereas both banks closed mixed. Regarding IT, positive, we already discussed in detail. Then to banks, HDFC Bank increased around 1%, whereas ICICI Bank closed near flat, marginally negative. About GIFT Nifty, today early morning it closed at about 20,000. It's only 2 more days to go for expiry. I don't know why, but yesterday the premium was very high, 70 points. But I expect it to drop 20 to 30 points today, equating that to our spot market, indicating 50 to 70 points positive gap up opening. Then in case of institutional activities, as a consecutive session, FII turns net buyers. Yesterday they bought for 780 crore rupees and DII also net bought significantly for 1,320 crore rupees. As a summary, US market closed positive, so global momentum is okay. Even Indian IT ADR, GIFT Nifty all indicating the 50 to 70 points gap up opening. However, have to be little cautious at present. Market is betting on positive Indian GDP growth data, which is due to release tomorrow, so that might possibly trigger either profit booking or also short covering as well. Moving on, as per stock open interest, Tata Communications, L&T, ICICI Bank, Navin Fluorine, Bharat Forge, ITC and Dalmia Bharat got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, India Cement, BPCL, Manappuram Finance, NTPC, Adani Enterprise and Tata Power got an increase in open interest along with a positive price close, indicating long build-up. About the things to look out, nothing I'm aware of before and during our market hours, but after our market hours in the night, in Europe, Germany's November month consumer inflation and for US, third quarter GDP data and crude oil inventories are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty opened gap up of 50 points, then till 2 p.m. it managed to remain in range bound. And in the last 1.5 hour trade, it gained strength and closed above 19,900. However, after market correction, pushed it below 19,900. So finally, it got the breakout from the November 16th candle, 19,620 to 19,875, which holded the Nifty in the last 7 trading sessions. Just for info, this is the highest closing since September 20. Thus, on the daily chart, it formed a short green candlestick pattern with medium upper and lower shadow. However, the slight negative was it closed below 19,900. So, in order to move above towards 20,000 and towards all-time high value, technically it's very important today, it has to close above 19,900. Hence, a sustainable move above 19,900 levels could result in Nifty rising towards new all-time high value in a quick period of time. But closing below 19,900 or any dip for that matter, again it will fall back to the consolidation where it could find the support around 19,800 to 19,750 levels. In terms of short-term target, the consolidation range breakout happened in the form of an ascending triangle formation, and as per that pattern, the short-term target is at 20,170. Anyway, in terms of resistance, next immediate hurdle is at 20,045. In case of Bank Nifty, it opened 80 points gap up with little bit of volatility. It continued its positive trend for the third consecutive session and also it sustained about 20-day exponential moving average. Thus, on the daily chart, it formed a small-bodied green candlestick pattern with long upper and lower shadow and continued higher highs and higher lows for 3 days in a row. However, yesterday itself, it did try to break out above 44,000 for 2 times, but it haven't succeeded, which is a critical resistance level. So, a successful breakout above 44,000 on a closing basis might trigger significant short covering and can push the Bank Nifty towards 44,300 and 44,500 levels. Meanwhile, on the lower end, the support is at 43,600. Then, regarding options, the maximum call option open interest was at 20,000 strike, followed by 20,100 and 20,200, with maximum new call option writing at similar strike price. Thus, the options data indicated and moved the crucial resistance area to 20,000 to 20,200. Whereas the maximum put option open interest was at 19,800 strike, followed by 19,700, with new put option writing at 19,800 strike, then 19,900 and 19,700. Hence, the support is at 19,800 to 19,700 levels. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investigation based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.